Welcome to Halal Money Matters, sponsored by Saturn Capital. I'm Monem Salam. Today we're taking a closer look at Stablecoin, an area that's getting a lot more attention than it was before, but also raising some important questions from a Sharia perspective. Are the underlying reserves really there? What kind of assets are backing these coins? And to help us unpack all of these issues, I'm joined by Mufti Faraz Adam. He's a leading UK-based Islamic finance scholar. And I want to say UK-based because, mashallah, he does work all over the world. And head of global Sharia advisory firm Amana Advisors. He spent years advising Islamic financial institutions around the world and analyzing emerging products like stablecoins through a Sharia lens. Mufti Faraz, thank you for joining the call. Assalamu alaikum, and really I'm honored that you're here.
Walaikum salam. No, the privilege and honor is mine. It's been a long time coming, and it's finally happening.
It's finally happening. It's been a while. I'm glad we were able to make this work out. What we're going to be talking about today is a little bit about stablecoin. We're going to talk about cryptocurrency and those type of things. And we're going to take it from two angles. One is that I think our sometimes our listeners don't even know what it is. So maybe we'll start there. Generally speaking, and then kind of dive a little bit deeper into, what the different types of cryptocurrencies are, and then specifically focus on the stablecoin aspect of it. I think that's kind of where we'll start. But, let's from a simplistic perspective, somebody comes up to you, maybe even like a 10th grader and says, hey, I really want to know more about what is cryptocurrency. How would you address that question that somebody has?
Yeah, I would initially start with just saying the term cryptocurrency can be very misleading, right? Because we're talking about internet assets. We're talking about digital assets. That's what we're really talking about. And not everything that functions in this space is a currency. So you could have a digital token, which is actually being used to access some services. And so what I like to do is just to simplify the whole conversation. If it's a 15-year-old kid that comes to me, I would say, just like you're playing your PlayStation or your Xbox and all of these things, and you have these virtual coins which you can buy on a game, this is a coin for the internet. That's perhaps the easiest way to make anyone understand what we're talking about as far as a payment is concerned. But of course, online, not everything is about payment. You can have cloud storage. Now that cloud storage, you might want to access this. So somebody can create an application online, and you have to use a token to access that particular cloud storage. So you're retrieving some service with the use of that token. So these are just two simple examples if we to understand what we're actually talking about.
Great. And then I know one of the most common types of cryptocurrency is Bitcoin. So let's break down a little bit also from a simplistic perspective of really what that is.
Yeah, so Bitcoin was launched in 2009, 2010. The idea was to be a peer-to-peer, a digital peer-to-peer cashless system. The idea was anyone, anywhere, without a central party and without an intermediary, you could send value and payment. That was the idea. They should be just like how I can send a WhatsApp message to anyone in the world. I can hire anywhere in the world today. I should be able to send a payment anywhere in the world also. But there were always problems with this. Now, if you were to go a bit technical here, there were problems in a simple way. Anything digital, like the viewers know, if I have a file, a Word document, that can be copied and pasted, right? Your Control C and your Control P, or your Command C and your Command P, right? That's the problem with things which are digital. So that was what's known as a double spend problem. So the idea behind Bitcoin was, how do we create something using the technology that we have and prevent this double spend problem that exists, and yet have it as a system which is secure, safe, transparent, auditable. It's borderless. There's no central party. So it's not under any one party's control. Just the scarcity.
So just to be clear, like for example, when I want to buy something from you, I can give you cash, and there's no intermediaries between you and I. And so if I want to do this on the internet, if I do it via Bitcoin, it's the same thing as cash where there's no intermediary. Whereas if you're in England, I'm in the US, if I want to send you money aside from those two, the intermediary you're talking about is a bank where I have to wire the money over to you. There's costs, there's delays, and those type of things. Whereas Bitcoin might be instantaneous. Is that summary?
Yeah, that's one of the benefits of Bitcoin. But even the cash, if it's a hand-to-hand transfer, this cash is dependent or is a reflection of the economy that you live in. It's being printed continuously. One of the problems with fiat currency, again, another goal or objective, or even one of the kind of like issues that Bitcoin was solving for was, how do we create scarcity, or how is scarcity maintained in money? Because we know whenever something supply just goes all out and there's no control, the value of it drops significantly. And so if you have this printing machine which continuously, at the stroke of a button, you have money being printed and the money supply being increased, what's known as what we see as inflation, and that's the effect of that, then everybody's pound, dollar, cent decreases in value over time. And that's why we're continuously fighting inflation over the decades. And so we needed a system, or there was an experiment. How do we actually create something which functions a bit like gold, which is deflationary in nature? It's very hard to print gold. You can't print gold, right? The supply is also at 1.5% to 2% per year. So it's maintaining its value for the long term, right? So these were some of the points behind Bitcoin. But effectively, if you bring the conversation back to the main, kind of like the central thesis, it's just a borderless, censorship-resistant means of payment where nobody controls where you spend it, how you spend it, to whom you send it, and it's just there, secure for you. That's what Bitcoin really brought to the table.
Great. I mean, we have done a session on Bitcoin, so I don't want to get too much into that, because really the conversation that I want to have here is the concept of what's called a stablecoin. And so just very simply, as we get into more and more about this, let's kind of explain exactly what stablecoin is.
Yeah, so we just mentioned what Bitcoin was. Bitcoin was this internet type of money that was created. But the problem with Bitcoin was, and the problem is, the volatility. Yes, it's all these ideas are wonderful, how we talked about how you can send it, it's almost instantaneous. You can send it to anybody who has a Wi-Fi connection. They don't need a bank account. So we have millions across the world who are unbanked. They're financially excluded. Bitcoin and digital assets it powers financial inclusion, because now they don't need to go through crazy KYCs. As we know, in many countries, you don't even have a passport, or the poverty line where they sit relative to the poverty line is so low, they don't have access or even ability to travel to a bank. So how do we get such people empowered financially? Digital assets resolves that and gives them access to financial services which they would need wherever they are. So the problem with Bitcoin was the volatility. That was one of the major issues. And with many digital assets, volatility was always an issue. How could you use a volatile asset as a means of payment? Today it's worth X, tomorrow it's worth Y. What you were planning to buy tomorrow, you can no longer buy because the value of the payment has decreased. That was a problem. Hence came the stablecoin. The idea behind stablecoin was, let's take the good of digital assets and let's take the good of fiat, potentially, right? And merge the two together. So what we have then is a stablecoin, because a stablecoin is simply what its name says. It's a coin, a digital asset, where the value is relatively stable to other digital assets.
So the idea is basically what the main problem was the actual idea of the fluctuation. You get rid of that, but the payment system, how it actually works through the on the internet, anywhere in the world, all of those things stay exactly the same. So now we get into the mechanisms behind it. So I think there are different types of stablecoins that are out there. So maybe we can talk a little bit about some of them. One of them is going to be fiat backed. And so I guess by the name, what it means is that it's backed by a certain currency of a certain country?
Yeah, so there are multiple types of stablecoins, and the world has seen different experiments when it comes to stabilizing crypto value. That's what we're aiming to do here. The one of the most common and well-known, or the largest stablecoin in the world, is USDT, or Tether, right? The idea behind one type of stablecoin where it's pegged to fiat currency, typically the US dollar. What that means is a promise from the issuer, the entity which issues the stablecoin, that, and they work with authorized participants and authorized parties only. So you have to be a financial institution who's registered and authorized in like the primary market, so to speak. What they would do is, if you deposit with them 100,000 US dollars, actual fiat currency, or you deposit that with them, they will issue to you 100,000 USDT, so 100,000 crypto stablecoins. That's what they'll do in exchange of this. Now, you can go and sell this on in the market. You can trade these USDTs. The idea is, if anyone came back to them in the primary market, presented these tokens, they would make that exchange with you again.
Right.
So that the redeemability feature, that peg, is what maintains the value, because there's this assumption and trust in the market that if ever we wanted to convert this back into fiat, it'll be on a one-to-one basis. And that's what maintains the value of such stablecoins, knowing this. And obviously Tether and any entity who issues stablecoins, they'll be audited. They have to have some kind of like records, audits taking place. They try their best to be transparent and give that confidence to the market for any particular stablecoin.
There was a time. Sorry, there was a time, I think, when there was some a question of whether or not that the reserves were there, right? And there was a negative reaction to, let's say, that the stable price of that. Can you just explain a little bit what happened? Because I think it'll help explain to people what the peg actually means.
Yeah, I mean, there were some concerns, and without going into the details of whatever the findings were and the issue that had come to light. Since then, what we're aware of is there has been an improvement in the entire market. So the entire market now has realized that making sure things are transparent and what's being said is being delivered, it's critical for the success of any particular digital asset. So the transparency and being audited, being accountable, being governed by third parties, having custodians there, and having a governance framework around any particular issuance is now what is key, as we've seen with Terra Luna and other particular digital stablecoins and digital assets. The market is moving more and more towards governance, regulation, being audited, being transparent, which is really a plus point for the market and for the wider economy.
The so far, and this is maybe my lack of knowledge, but I've seen only stable coins on US dollar. Are there others as well that are on other currencies?
Yeah, so the European Union, they're trying some things. We know that there's some stable coins in the Middle East. I've just looked at a few projects in the Middle East, which are not backed by the USD or not pegged to USD, or rather pegged to local currencies.
Which is then pegged to the USD.
Yeah, I was about to say that, but yeah. That's but they're becoming more native in their kind of like approach.
Sure.
There's discussions in Southeast Asia as well on launching more local or locally backed currencies, stablecoin. So we're seeing this emergence of different types of stablecoins, and we're also seeing the regulation at the same time coming to the fore. So it's a very interesting time, and I would say perhaps the most. So if we go back to our initial point, you have the fiat-backed stablecoin, right? That was one type. The most interesting type of stablecoin for me, and perhaps what excites me the most, is the commodity-backed stablecoin, if we can call it, where you have a stablecoin which is not pegged to USD, to a fiat currency. Rather, this stablecoin reflects ownership of gold. So you have a couple of stablecoins like Tether Gold, you have Pax G, and others. By holding the stable coin, it's a receipt of gold that you're owning. It's a certificate of gold, effectively. So whoever owns this, they can trace and track online at the very gold that they own. So by me using this, owning this, spending this, saving in this, I'm actually saving in gold. I'm spending gold. And that is phenomenal, because if we talk about Sharia compliance and we talk about Sharia money, right, whatever that means, right? But that would be perhaps the closest, in my personal opinion, that we can be to having money which is the most Sharia aligned in the 21st century.
So we started with, now we're getting into this idea of Sharia, and I know by your own right, you are a Mufti, studied this area. When you look at this area of stablecoin, what's the first question that you ask yourself when you're looking at whether something is allowed or not allowed on the stablecoin side?
From a Sharia perspective and a fiqh perspective, the first thing you have to do is understand what you're dealing with. And the question of what must be analyzed from multiple angles, because I can tell you what a stable coin is technically, but if I'm telling you what it is technically, I'm just looking at the thing itself. I can tell you then if I look at the peers of stable coins, we look at the different types of stable coins, we get a different understanding. If we look at the stable coin within the system it operates in, we get a different understanding. If we look at a stable coin from the perspective of what it's trying to solve and the problems that were there with its counterpart, then we get another understanding. So as a student of Sharia studies and Islam, our role is not just to simply analyze something in silo. We have to understand the thing holistically to really get our thumb on the pulse and understand what is it that we're actually dealing with. What is this thing? Because if we don't do that, the problem then becomes, let me give you a very simple analogy. You're told that you must drink liquid, 2 liters a day. So you say, fine. You go to the Walmart or any store, and you pick up 2 liters of soft drinks, right? A fizzy drink full of sugar. Now you come and drink that. You fulfill the doctor's instruction of having 2 liters a day. If you're only thinking about that particular instruction or requirement. But if you ask anybody, take a step back and look at the context further, would anybody say that's a healthy thing to do? It's not.
Right. Yeah.
But they'll say it's halal. Nobody will say it's wrong. They'll say it's halal. You fulfill the instruction of the doctor. Then you look at the counterparts of this. Then you'd say, okay, there's soft drinks, there's diet versions as well, relatively better. You'll also have water. So you'll say, okay, there's some things which are better than the other. It just creates this kind of like scale that you're looking at. Then if you take a step back, you begin to think, what's the reason for the doctor to tell me to have 2 liters a day? Well, it's to keep you hydrated. That's another metric, another way to measure which drink you should be drinking. So you see, by just analyzing and taking a step back and zoning out and zooming out, you begin to realize there's different things. And that's when you actually get this kind of gradient of saying, this is far better than this thing. And in the entire Sharia compliance world and Islamic finance world, this is perhaps one of the most important things. Because many a time we look at things and analyze things in silo.
Yeah.
When you begin to look at the parts within the whole puzzle, right? And the system is a sum of its parts. We have to understand that part within that system.
Yeah.
That's when we really begin to analyze, understand, and recognize the efficiency and the negative externalities of a certain thing. Then you can say, yeah, well, we're doing this because we don't have these parts. But when we have these parts, we have to get rid of this. It's not good. See, the Coke would work, or the whichever drink, if it's not Coke, right? You're drinking something else. Any soft drink would work if you don't have any other liquid with you. But the moment another liquid comes on the shelf, you should get rid of that.
Yeah.
So
I think part of it is that a lot of people are just looking for simple answers because they don't understand the system as a whole itself. I get so many questions about, the question is cryptocurrency halal? And I'm telling people, look, there's 7,500 different coins that are out there. Which one are you specifically talking about? And so they just want a general answer, but I think you're absolutely right that it has to be something that's looked at on an individual basis, systematically, rather than just yes or no and everybody's
Exactly. I
fine.
mean, that's the disservice that we do. Like, if any scholar simply just gives an answer based, it's a disservice.
Yeah.
And likewise, it's not as simple as saying a yes or no. Because look, there's a whole system. So as a student, if you ask me the question, what's the first thing that I look at? I have to understand all these moving parts. There's so many moving parts, and it's not something. The thing about the crypto and the digital asset space, this entire industry, it's moving at a 10x speed, literally. So if people are still debating whether Bitcoin is halal or not, that was last decade's debate. This decade, we're talking about something completely different. We were talking about DeFi and NFTs like 5 years ago.
Yep.
Now we're talking about stable coins, right? Which is like a whole other dimension. So if anybody dropped off the conversation 10 years ago by declaring it haram, they have no insight at all on the advancement of the discussion, which is really sad in a way as well, because all that knowledge generation is gone.
Gone. So now let's kind of look at that system, that approach that you talked about, and let's look at it from that stablecoin perspective. We talked earlier about the fact that when a company like Tether or Circle issues a digital coin, there has to be like a dollar for dollar backing of that. And so now, whether I mentioned two of them, USDT is one of them, USDC is the other one. What are some, maybe if you want to call them, structurally problematic things that happen? Because what I've noticed is that on the back end, these companies like Tether, and this is the greatest business model in the world, which is you take your money, you can't pay anything back, but you keep it, invest it, and just basically make all the money in the world. And so what is is that something that as a user of stablecoin, should I be worried about the fact that they're using my money for something that's not allowed?
So there's, in relation to these types of stablecoins, where the issuer effectively sells your token, that's what's happening. You're buying a token and you're giving a dollar. They own all the upside and everything that happens there. It's not even a loan or deposit, because they're not deposit-taking institutions. They would be a bank if they were, right? But they've sold it to you, and it's just a promise that if you ever come back to us, we'll redeem. So it's not a loan. Rather, they're promising to repurchase your stable coin from you again in future for $1 value at a one-to-one basis. So yes, they are investing in T-bills and money market instruments and all these types of things in the back end, which are non-Sharia compliant investments, as we're all aware. That particular, for the issuer, that's problematic from a Sharia perspective, 100%. For the user, for the farmer in Pakistan who wants to simply hedge against his local currency and save in USDT, because that's the only thing widely accessible and well known, or the lady in Indonesia who's receiving remittance from a relative in Dubai, for instance, in USDT. They get $100 a month, and that becomes their life saving on a monthly basis. That's helping them just to stay afloat.
Yeah.
For such individuals using USDT, it's somewhat similar to just using a dollar. That's what I would say from a Sharia perspective, right? They're disconnected altogether from what happens behind the scenes. They're just using this as an instrument. They for them, as far as they're concerned, then as long as they're not earning interest on it, they're not investing elsewhere or doing anything, it's an instrument. It's a tool for them. It's okay. If for the issuer, though, if any entity wanted to issue a stable coin, for them, it would be necessary then to ensure how it's being issued, where the fiat currency is being invested, how it's all structured, that functions in a Sharia compliant way. If that's not done, there'll be a problem at the primary market level, at the issuance level. But again, downstream, it literally becomes, it's disconnected. It's not a loan or anything. It's an asset in and of itself. Just like the dollar is an asset in and of itself, regardless of how it's been printed or what's happening there, it's disconnected. So the ruling will be different at this level and at the primary level, and at higher up, the kind of upstream, you could say.
Yeah. So just to kind of recap, it would be more, I mean, as a person who's a user of the stablecoin, I can use it, no problem. It would, if I'm going to claim Sharia compliance of it on the actual issuance level, then you have to make sure you're investing in the right instruments and making sure all those things are okay.
Yeah.
We
Just
talked a
one
little
more
bit
thing.
about. So good.
Sorry, just one more thing I'd love to add here. If
Yeah.
we're true to our earlier statement that you have to look at things holistically,
Yeah.
and we have to compare and you have to look at the system, then I would make the argument that using a stable coin which is backed by gold and taking ownership of gold would be better in every sense than using those which are one-to-one with the dollar. And there's a structural problem where there's interest in the back end. Although the user will not be held liable, neither will they be sinful because they completely remote and disconnected from the activity. But if now there's alternatives available for any user, me personally, I'd feel much more comfortable using a gold-backed stablecoin than any fiat-backed stablecoin.
Yeah. And this might be something we cut out later on, but I do want to have a question about that. So I'm going to ask it right now. So now you talked a little bit about gold, but the issue that I see with gold from let's say from a practical perspective, is that, it doesn't cost money to store a stable coin that's US dollar based, but it will cost money for the operator to be able to store the gold for the conversion of that. And, I mean, that's a law of numbers. Obviously, the larger you get, maybe your cost comes down, but there is still a cost to it. So really, is it probably, I would say, never becomes dollar or gold for coin because of the cost. It'll come closer to it, but it'll never get there. So how do we kind of handle that aspect of it?
So it all comes down now to a transaction itself. When in the primary market, if you are buying gold, because if it's this coin, that's token that you have, it's not a one-to-one always. It's not like 1 gram to one stable coin. You're buying something with it. They can value the gold at whatever value they want. And maybe the price that they're selling for incorporates these additional costs, which is a reality. And that's how it would be covered. But then you might be paying for 1 gram, you might be paying a slightly higher margin than what a person is paying for when they're buying something off the street when it's hand to hand.
Yeah, I got it. Okay, no, that makes a lot of sense. Thank you for that. Now, and then going back to this area, then it's more a matter of, like, so we talked about this from a stablecoin perspective. The user, okay. On the other side of it, you have the actual issuer that they're putting it into U.S. Treasuries or those type of things to maintain that stability that's there and keeping all of those return for this. So, which then begs the question, how can you make this stablecoin halal from like end to end, basically, right? Now, what is a mechanism that we can use to do that?
Yeah, and this is perhaps the greatest need of the hour, right? If you have a stable coin which is end-to-end Sharia compliant, which would mean that the issuer issues a stable coin whereby the underlying, I mean, there are experiments out there, and there's other versions of stable coins whereby the actual stable coin, the user retains an interest in an underlying pool of Sharia compliant assets. So the stable coin now becomes almost like your sukuk certificate, almost like your ETF unit. That this is an interest, and then that becomes the currency and the stable coin itself. So whenever you're trading and using, it's underlying is actually Sharia compliant assets. So it could be a wakala pool of investments that you've invested into. And that can be multiple things. It could be gold in there can be something else in there can be a mixed kind of diverse thing. And then this stable coin can be on one end can be used as a medium of payment and transferring value, but at the same time it can also be receiving dividends if this pool is issuing or has some kind of like returns generated in a yield. So it'll be a yield paying stable coin, which will be phenomenal.
Yeah, which is right. I mean, now as we talk about like industry developments and how fast things are moving, I think probably that's the next level of the stable coin, which is, now how do we give money back to the actual holder of the coin? Because as of right now, it's illegal.
Yeah,
Right.
exactly. Exactly. That's the problem. I mean, there's definitely conversations in other parts of the world that I've been involved with and been on the table where these type of things are being discussed and thought about. So there's definitely an attempt to be the first mover, so to speak, in this space and to create such assets.
I know the brings up a point which you mentioned just now. Kind of thought about was when you're looking at the use of stable coin itself, and you're an expert in this. You've kind of dealt with a lot of companies on the Sharia side, so you know this. Where do you see the most adoption of this? Is it mostly in the West, or is it in Muslim countries? Where are you seeing the biggest use of stablecoin?
Yeah, so stable coins in the West is a luxury. It's not something that's really needed. Whereas in many, we could say, Muslim majority countries where poverty is high, inflation is high, we're talking about Asia, Southeast Asia, some African countries, there, the use of stable coins is not a luxury, it's a necessity. That's the only way that farmer who works for 30 days, 12 hours a day on his farm, his sweat and labor can retain its value. Because if he uses his local currency and he stores and saves his efforts in his local currency, it'll go all down the drain and it'll corrode and erode with inflation. So for them, that's where I'm seeing the use of stablecoin in countries like Pakistan, in countries like Indonesia, in African countries. We're seeing the use of stable coins sky high. It's year on year, month on month, it's increasing because for them, this is a real means for them to save. And for them, when they're comparing it to their local currency, this one's going up and that's going down. So it's like, wow, for them, it's just not only a hedge, it's a real means of savings for them. And that unlocks so many possibilities and potential for them in their local market.
So now, you're absolutely right, and I think what in other terms you can call it the people that are unbanked, like they don't have any mechanism of doing that. But let's kind of get a little bit more practical, if you don't mind. So I'm a farmer, right, and I'm living, I don't know, somewhere in Africa, and I decide, wow, okay, this is a good stable way for me to do transactions, which is on stablecoin. So I go and I open up a wallet basically to be able to do it, but I need to be able to make that initial deposit for the U.S. dollar. But if I'm unbanked, how am I going to get that US dollar and how am I going to put it into my wallet?
Yeah, so now this depends on who you are, like who you're dealing with. So let me give you an example. There's an entity, like Facet, the entity that I'm a Sharia advisor to. They work, there's not only, you don't need to have as you know, in some countries, you don't even need a bank. You have like mobile money and other forms of money that can link up to an app, and that can then allow you to convert. So there's multiple ways of converting into digital, kind of like a digital money, to then be able to start saving in USDT or PAXG or XAUT.
Okay, that's great. And then I know we talked a little bit about this earlier, but I want to kind of just visit that again. When we talk about like having a yield on stablecoin, or having some type of a passive income, right? If you're in your view, like what is it that could make that stablecoin halal? The underlying asset, what is it that we could do with it to be able to make sure that the yield that you're getting would be halal?
Yeah, so the current problem is with stablecoin yields, many of them are used as collateral. And so they're collateralized, and then what you're doing then is you're borrowing money, and that's a collateral. And then that's being invested again or lent out. And you're being charged a fee for that, for the borrowing that you're taking. And that becomes interest and riba, of course, right? So many DeFi or yield mechanisms that exist right now on chain for stable coins involve lending with interest. And stable coins by themselves, by the nature of stable coins, they're not yield producing. They have to be invested. So if I hold a gold token, for instance, or if I hold a USDT on its own, it's not generating any yield. It has to be invested into something. And so what happens is, in many projects online, they require you to deposit your stablecoin as a collateral, give you access to liquidity, which is then invested elsewhere. And that's where the yield is coming from. It's not really even invested. It's lent on, you could say, lending protocols. And that gives you an APR, right? And that's the problem from a Sharia lens and a Sharia perspective.
So just to be, I'm getting a little bit more in the weeds here. So I have my stable coin. that I got from, let's say, Tether. So I've given them $1, they give me one coin. So what you're saying is, if I take that and I give it to you on the basis of investing it for me and giving a yield, you're saying that contract is actually more of a loan that I've given you doing that. Am I understanding that correctly?
And so what happens is there's current protocols out there on chain where they require you to lock your stable coin with them. So you lock your stable coin, or effectively give it as collateral. They will mint tokens for you, right? Which is they're lending you money now with this, or lending you these tokens. These tokens then are like liquidity tokens on an exchange, and then you get a yield from there. That's what's happened. And then they're charging you because they've done all of this stuff for you. They'll charge you a fee. Now that, depending on the structure, very likely those types of like if there's a fee being charged, if it's a loan, would result in riba, effectively on chain. If I'm taking a stable coin from you and I'm investing that stable coin in actual investment, whereby maybe we're investing in an online business which is accepting stable coins as a payment, and then they off-ramp that and they convert that, but then they convert it back to stable coin and give you your principal plus profit if there was real profit generated. That would be Sharia compliant. The only difference there is like me investing in the UK, investing in American market. I'd have a nominee or a fund manager who I can pay into like GBP maybe, and he'll convert it in USD, right? That conversion takes place, but then once I receive it back in my bank account, it'll be GBP. So it's a similar kind of concept. It all just depends on, if we were to make it really simple for the audience, it just depends on what's happening with your stable coin. Is it being invested into something, or is it simply being held without any investment, without any activity? If it's held and there's no activity whatsoever, yet you are being made to pay something or you're earning something, that's when it typically becomes riba. But if the stable coin is moving, and this is the beauty about Sharia, like if you were to really simplify investments for people, it's just this difference. Riba stagnates, investments move. Yeah? And if you understand that kind of like picture and that framing, you begin to realize Sharia makes the permissible the one that moves. It goes into different assets. It's productive. It's generating. It's moving hand to hand. The riba system where you're just locking in and it's a one-to-one. It's held there. It's just with one person. He's giving you something. That's where it's a problem.
That's a really great explanation. And now also, you are an author of a book on the subject as well. So I wanted to kind of ask you, like, maybe you can talk a little bit about the book and what it is briefly. But then also looking at it from a Sharia compliant perspective, like when you're looking at this area, what are some non-negotiables for you that you say, absolutely, this is the basics that we have to have before we move on to something else?
I think the fundamental question from a Sharia perspective is there utility? It's not about form. It doesn't matter what the form is. Like we right now we're speaking online. We're using a screen. Computers have ones and zeros behind. If I give a ruling based on ones and zeros and argue over that all day and night, we'll end up nowhere. Literally, right? We'll be stuck in the very place we started. And we'll say this is not even something of value, it's just ones and zeros. But if we take a step back and look at the utility and the benefit of what's happening now, PDF files, data, apps, all of these things, really is just numbers at the end of it, right?
Sure.
More importantly, the question is, what does this unlock? What does this allow? What's the benefit of this? What's the utility? That is the fundamental Sharia question. Why is that the fundamental Sharia question? It's because of one equation, which is the equation of bay and trade, which is for me to gain value, I have to give value. That is the entire philosophy of Islamic finance, of Sharia. That it's value exchange. If I'm not giving you something of value, I can't take anything from you. You can't demand something from me if I don't. That's why riba, why is interest a problem? Yeah, as long as it's par, I've given you something of value, I've taken something of value. But at par, the excess that you're taking, what is it against? Against nothing. I've not given you anything of value. So how can I demand something from you in lieu of that? I can't. So the Sharia operates on this philosophy and idea. the giving and taking of value, the exchange of value. That's fair. That means both parties are equal footing. No one party is being given an advantage and upper hand over the other. And that's why you call it a fair system. There's no predators in this market from a Sharia perspective. Everybody's equal. No matter how much you've been blessed with wealth, doesn't give you more power than me. You can't, as a corporate, have the terms of the contract all in your favor. There's certain things you have to be balanced. So, from a Sharia lens, that's why I say the most important thing is understanding the utility of something. If we find utility, that means you're not selling junk to me. You're not selling means to me. You're not selling nonsense to me.
Yeah.
You're selling things which actually have a value. I can use that elsewhere in the world productively and gain something. I'm not being ripped off. Because if you sold something which has no value, you've made money. But what about me? I've lost. And that's why Sharia is a win-win game. It's not a zero-sum game where there's a winner and a loser. Never. There's no contract in Sharia, in Islamic finance, which results in a win, a lose, or a zero-sum type of game. It's either win-win or lose-lose. There's no win-lose. That does not exist.
Very true.
And that's why everything in Sharia comes around these ideas.
That's great. And thank you for that. And you didn't mention your book, so why don't you talk a little bit about that also, as if you can?
Yeah, I mean, this book is now out of date. I wrote a book back in 2021, I think, on an introduction to Islamic fintech, right?
And that just speaks to how fast this industry is moving, I'm assuming, right?
Literally, I look. People ask me about that book. I say, you know what? I wouldn't recommend to read it now because it'll give you some basic knowledge, but the industry has moved so far ahead. Maybe 2 years ago, I was about to write on DeFi. I started writing. I wrote 2 chapters. Then I took a step back. I said, you know, if I write this, by the time I finish this, it'll be like a historic book. It'll be out of date. It'll be ancient. But this is the nature, and perhaps discussions like this, perhaps the best medium to talk about these critical issues in real time.
So and that brings up a good question. So I mean, I know in Islamic finance also the idea is that and people talk about this thing like, you know, that you shouldn't assume something is haram. You should assume that it's halal, and you have to prove that it's. And is that where that innovation actually comes from your perspective, which is, you know, just, you know, it's going to start running away from you. How do you keep up with it, for number one? But the other part is, do we allow this just to run and come back later and say, wait a minute, this was not allowed, or those type of things?
Yeah, this is a wonderful and a brilliant question. So back in 2019, 2020, I proposed a model called a Sharia sandbox. So just like every government or many jurisdictions, you have a regulator sandbox where they allow you to test certain ideas of products in a controlled environment with the oversight of regulators and everything. So making sure consumers are protected as well. We should be thinking about, in this day and age, with the speed of like innovation, with technology advancing, with AI now, we should be thinking about a Sharia sandbox. What does that mean? It just means that the basis and default is everything is permissible unless it's something clearly prohibited. But at the same time, the very question you raise is there can be something we don't know right now. It can be harmful. So you have a team. You have Sharia scholars, you have practitioners, fund managers, you have lawyers, you have accountants, and regulators, all and economists. Everybody around the table. As a working group, you analyze this for 2 years, 5 years. Keep analyzing this. But right now, it's permissible. We allow it because from a Sharia lens, we're starting with a very clear basis. If after that 5-year oversight, 5-year experiment, it becomes clear the harms are, you know, tremendous and it's disastrous, then the regulator can ban it. The Sharia scholars can pass a fatwa saying it's not Sharia compliant, and economically can discuss the downfalls of using such a technology. But if is the case, like in digital assets, what would happen is you'd create, by the end of year 5, you'd have a framework. Because now you've seen the things, you've seen how it works, you've seen the positives, the negatives. So by the end of year 5, the knowledge generation and creation will be exponential, it'll be phenomenal.
Yes.
Right? And it's all these different expertise, because a Sharia scholar needs an economist needs a lawyer needs an accountant. We need to start working together in these things. The scholar does not have all the answers. He needs other people to get his holistic view. And so you have this framework that's built, you get this kind of like bird's eye view over the entire reality of this thing in the system. You leave with a framework which can then act as a launch pad in many countries and excel that particular country. This is what I proposed, and I've written about it online. That if we start having at least Muslim majority countries like Malaysia, where the country is so advanced in Sharia governance, where you have Bank Negara Malaysia, it's from top down. Sharia is really like embedded in everything they do. These countries can be really at the forefront of this type of innovation. And I know that because I've been to that amazing country multiple times and spoken about stable coins and digital assets. So this is what I propose in your particular query. We need to start thinking along these lines. So we're not just blindly going into something and saying, yeah, it's all permissible. It's a structured way. But what the main thing is, we shouldn't be inhibiting innovation. This is my current problem. If we issue a fatwa immediately after 1 month, oh, it's not permissible because it's ones and zeros.
Yeah.
We've literally prevented the Muslim Ummah from innovating and leading this industry. And sadly, many a time we score own goals. The World Cup is happening right now. Hey, the feeling of an own goal. And that's what we do many a time. We stop innovation ourselves because of our short-sightedness. And so we need to change the approach from the get-go to allow innovation. We should allow entrepreneurs to try things, have crazy ideas. That's the only way we can really add value to the world and be like the past kind of like your Ibn Sinas and your kind of like, these Khwarizmi and these wonderful people who came and gave to the world, because that's what was needed right now.
Yeah. I mean, I guess let people tinker and do whatever they need to try to solve the problem. And I think for what's happening now, as you kind of rightfully said, is that, too early, some scholar comes out and says it's not allowed. And then what ends up happening, what I find is that, it's usually not the scholar who said it's allowed that's the news spreads fastest on. It's the one who says that it's not allowed. And so, all the online or LinkedIn, whatever it is always talking about the one scholar who said it's not allowed, when everybody else has either said it's fine or they've kept mum because they don't understand the situation, and they'll come up with it once they see the use out of it as well.
And this is a problem that we face. So, I mean, if there needs to be more kind of like you could say collective efforts at that scholarly level as well. But it's just one of those. Sometimes just you'll have difference of opinion. Always, this is the nature of thing. So the scholar saying it's permissible doesn't mean he's 100% right. The scholar saying it's impermissible doesn't mean he's 100% right. The main thing as a reader, just look at the weight of the arguments, understand, and whichever scholar you feel has more knowledge of this, more insights of this, and is God fearing in your eyes, you can adopt their view and carry on building. Sure. But as a community, we have to build. Our central kind of like from a Sharia lens, if we look back in our history, the Muslim Ummah and Islam teaches us to be builders and producers. From day one, the Muslims are producers and builders. We were never ones to simply receive. That's why the upper hand is better than the lower hand, right? And that has an entire like philosophy behind why that. You have to be doing economically something to be the upper hand. You don't just get there, automatically. So that's really our narrative. We have to give to the world because we do have a lot to offer. We really do. Our tradition has so many beautiful things for the world. But we have to build. You have to be builders in this day and age. You have to be entrepreneurs. You have to do something to really leave an impact and to enable things. It's not just about doing religious things. Even creating software which solves a real problem for the world is rewarding. Absolutely. But we don't think like that.
Mr. Now, and I'll kind of wrap up with this question. I mean, you're very, very embedded in this area, and from what I've seen, you're very on the cutting edge of this area as well. Without giving any secrets away or whatever it is, where do you think the industry for let's call it halal stable coins? Where do you think it's headed, or is it so different that we have no idea what's going to be looking like 2-3 years from now or 5 years from now?
This is no secret. So one of the entities which I'm working with very closely called Facet, they've just launched a Visa card, right, which is stablecoin backed. And I think that's really the next wave in this entire where any person can open an account with Facet, which you're saving in gold, but when you go to your shopping and you're tapping that card and you're paying for any of your groceries, you're spending gold. So you have Visa reach and you have gold-backed currency.
Gold back. Yeah.
It's amazing. That now changes the entire conversation. It's another level and layer in our understanding of what this technology can do for us. And if we present that to any scholar, I have no hesitation. As long as the Sharia criteria are met, they would say it's fine.
That's great. I'm looking forward to that. Unfortunately, that company is not very common in the U.S., but I think that
It
hopefully
will be very soon.
it will be very soon, especially with Visa and the Reach, and World Cup and everything along those lines. Mufti Faraz, Jazakallah khair. Thank you so much for kind of helping us kind of break down sometimes very complicated issue into very, very simple terms. Not only complicated on the actual technology side of it, but also on the Sharia side of it as well. So I really do appreciate your time. Jazakallah khair, and may Allah bless you and continue to give you more so that we can all benefit from it.
So, I mean, no, honestly, the pleasure was mine, and I look forward to speaking with yourself again and learning from you also.
Thank you.
Thank you for listening to Halal Money Matters. If you like what you hear, please do rate us on the app stores and also leave us a review. It helps other people find us a lot easier.
The thoughts and opinions expressed on Halal Money Matters do not necessarily reflect the views of Saturna Capital, Amana Mutual Funds, or their affiliates. This podcast is prepared based on information Saturna Capital deems reliable. However, Saturna Capital does not warrant the accuracy or completeness of the information. We do not provide tax, accounting, or legal advice to our clients, and all investors are advised to consult with their tax, accounting, or legal advisors regarding any potential investment. Investors should not assume that investments in the securities and/or sectors described were or will be profitable. Investors should consult with a financial advisor prior to making an investment decision. The views and information discussed in this commentary are at a specific point in time, are subject to change, and may not reflect the views of the firm as a whole. All material presented in this publication, unless specifically indicated otherwise, is under copyright to Saturna. No part of this publication may be altered in any way, copied, or distributed without the prior express written permission of Saturna Capital. Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting www.amanafunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Amana funds in a free prospectus or summary prospectus, please visit www.amanafunds.com or call 1-800-728-8762. The Amana funds limit the securities they purchase to those consistent with Islamic principles. This limits opportunities and may affect performance. The Amana funds are distributed by Saturna Brokerage Services, member FINRA/SIPC, and a wholly owned subsidiary of Saturna Capital, investment advisor to the Amana funds.